premium portfolio across the globe for general insurance premium. We'll start with as you can see, there are so many of the products, there are so many of the things which we should know, we should understand, we should be acquainted with. These are: first, personal accident insurance; second, burglary insurance; third, money insurance; fourth, shopkeeper insurance policy; fifth, householders insurance policy; sixth, fidelity guarantee; seven, bankers indemnity and jewelers block; eight, pedal cycles; nine, plate glass; 10, neon sign; 11, health insurance; 12, overseas mediclaim policy, which is part of the health insurance. So these are the 12 basic subjects or the 12 basic chapters which we need to understand in this miscellaneous insurance. Now we'll first start with the personal accident insurance policy. What is personal accident insurance policy? As the nomenclature says, it is the accidental insurance policy for a person. When an individual is taking any of the insurance policy for any of the unforeseen events which will result in the bodily injury or death to an individual, whereby the nearby or the near ones or the family members of the person will get the compensation in case of death. And if the person is having any bodily injury, in case of any disablement, he will be deprived of some of his income, because if he might have been healthy, he could have earned much more. So this personal accident insurance, what it covers? First, this policy covers any bodily injury oblique death resulting solely and directly from accident caused by external violent and visible means, and not aggravated by bodily defects or infirmities. To better understand this concept, I will just tell you the very important factor is that this type of insurance covers the accident which are solely and directly by, and these are caused by external, violent and visible means. So that means any accident should be treated when it is external, it is violent, and those are visible. So these visible means are that you can visualize. What is external? That is not any internal part, that is any sickness. The internal sickness is not termed as any of the accident. So external, violent and visible means, and not aggravated by bodily defects or infirmities. So in case of any person who is having already any defect, suppose a person is having one limb which is not in working condition, his hand is amputated, and he wants to take the personal accident cover. Definitely he will get the personal accident cover, but anything which is related to that amputated hand will not be covered if any accident happens to that individual. So the policy, this covers any bodily injury, death resulting solely, please remember, solely and directly from accident caused by external, violent and visible means, and not aggravated by bodily defects or infirmities. Second one, although there may not be any loss of earning capacity, there still can be disablement under the policy. What this means? This means, suppose you have given a policy to a shopkeeper. One of the shopkeeper to whom you have given a policy, if any accident occurs to him, suppose he is coming to his shop by a motorcycle, and in between he met with an accident. Due to the accident, the shopkeeper might have sustained the disability injuries of fracture to both of his hands. Suppose both of his hands has got fractured. He is treated in the hospital, he is confined to bed, and he is there at home. say for example a month, but still his shop will be running. That means ideally, if you think of the indemnity principle, his loss of earning is not at all there because his shop is already being going on and he must be earning something. But since these are the fixed benefit policies, these are not the policies of strict indemnity, his loss of earning will be treated like if suppose that shopkeeper would have attended the duties, he might have earned more. So the shopkeeper on his say might have said to you that, okay, though I have the loss of that is the total disablement for my hands is there, and if you think that the insurance company is thinking that there is no loss of earning because the shop is going on, but still if I could have attended the duties, I would have earned much more, which is a loss to me. So the second one, the second in the slide, I said that although there may not be any loss of earning capacity, there still can be disablement under the policy. Third one, these are the fixed benefit policy and not the policies of strict indemnity. Please note that the principle of indemnity is applied to personal accident insurance, but these are not strict indemnity. You cannot indemnify strictly like your fire insurance, or in case of any loss to machinery or anything, any sort of those general insurance where the principle of strict indemnity applied. Here, this policy is called as fixed benefit policy. Now we'll come to the next slide. When we are talking about, yes, for the second point, I will once again go and will explain to you. Although there may not be any loss of earning capacity, there still can be disablement under the policy, for which I have given the example of the shopkeepers, wherein the shopkeeper has not attended the duties, but his shop is running, his shop is going on, but still there is a disablement because both of his hands are under fracture. He must have put the plaster wherein he cannot go to the shop. So accordingly, there is disablement. But if there is no loss of earning, as insurance company says, then in that case, the temporary total disablement will not come in picture. But here, since the disablement is there and the person is unable to go to the shop, then his loss of earning capacity was there because he has not attended the duties, wherein his earning would have been much more if he could have attended the duties. So accordingly, he may claim that my earnings are lost. So this disablement is proved and the loss of earning is arrived at. As I already said earlier, these are not strict indemnity policies. These are the fixed benefit policies. So we have to honor such type of claims. Now, when we are talking about the benefits, fixed benefits, what are the fixed benefits? As you are seeing all these 1, 2, 3, 4, 5, 6 benefit chart of personal accident insurance, I will go one by one. First, death, 100%. What is this? 100% of capital sum insured, CSI. Personal accident, whenever any accident occurs to any individual and due to the accident, if death occurs and his sum insured is say 10 lakhs, then these 10 lakhs, that is 100% of the policy amount, will go to the assignee, the person, the family member. It may be his wife, his mother, father, whoever he is described or he is giving in our proposal form. The 100% of the capital sum insured goes to the family member, the assignee, and this death compensation is arrived at. The second one is loss of 2 limbs or 2 eyes, or 1 limb and 1 eye. Again, the compensation is 100%. 100% of capital sum insured. What is this second point? Loss of two limbs. So in any accident, if the person has lost both of his hands, these will be termed as loss of two limbs. Then our compensation will be 100% of capital sum insured. As we are explaining the sum insured of 10 lakh, then definitely the person will be getting 10 lakhs as the compensation. Suppose in an accident, both of his eyes are, that means both of his eyes are now not working. He cannot see. He is totally blind. Then in that case also, the 100% compensation is payable. Here, please try to understand, loss of two limbs means loss of two hands or loss of two feet. Loss of two eyes means both the eyes. He cannot see. But suppose if in an accident, one hand and one eye is totally damaged. Now it is not going to be operated, and definitely the person will not be able to use those in future. In that case also, the 100% compensation is payable. So one limb again, if there is loss of one hand and one eye, or one foot and one eye, in both these cases, the compensation payable is 100% of capital sum insured. The third point, loss of one limb or one eye. See the difference in the second one and the third one. The third one says loss of one limb, that is one hand or one foot or one eye. Suppose in any accident, if one of the legs is totally damaged, now a person is having only one leg which is in working condition, and the second leg, his right leg, is totally not in working condition. He cannot use it for any of his future things. Then in that case, 50% compensation is payable. When we are talking about capital sum insured of 10 lakh, rupees 5 lakhs is payable to the person who is suffering from the accidental injury. Likewise, if one eye is damaged, he cannot see totally with one of his eyes, which is lost due to the accident, again 50% compensation is payable. 50% compensation of capital sum insured. In our case, when we are talking about 10 lakh as capital sum insured, 5 lakhs are payable. The fourth point is permanent total disablement. See, the phrase is very important. This is disablement, which is in permanent capacity, that too total. This means a person who is having a disability wherein he cannot either walk or he cannot either go for his natural duties for earning capacity with any of the work, then in that case 100% compensation is payable. See, the difference is that the permanent total disablement is the person will be getting the benefit. In case of death, this is also 100% compensation payable, but the death compensation is payable to the assignee, the family members of the person who is suffering from the accidental death. Whereas in case of permanent total disablement, the individual is still alive. The individual is unable to move on to the work. So he is at home only. But in that case, since the disability is permanent and of total nature, 100% of the capital sum insured is payable. Here, in case 10 lakhs rupees is payable to the person who has taken the insurance policy. Here, the nominee will not get the money. Here, the person, since he is alive, he will get the compensation. Now, the fifth point, permanent partial disablement. Now, you can make out the difference between the permanent total disablement and permanent partial disablement. In case of permanent partial disablement, the compensation payable is as per the percentage shown in the table of the policy. Now, if you go through the proposal form, you will find that there are certain percentage which are mentioned on the proposal form itself, wherein you can see the permanent partial disability percentage. For example, why I am calling this as permanent partial disablement and not permanent total disablement, you can make out the difference. Suppose in case of any accident, when a person is having the accidental injury wherein his right hand thumb is totally amputated. It is cut by the doctor because of the accidental injury. In that case, this total cut of the right hand thumb of the person is permanent disability. This is permanent disability. But this is a partial disability also, because the person still may go to the work, he is going to the work, he may be losing some of his capacity to work better than he was in the earlier condition, but he can work and he can get the salary or get the emoluments. But this permanent partial disablement says that any of the his organ which are disabled due to the accidental injury which is in permanent nature, but these are partial disablement. So there are certain percentage, as you know, the thumb you may get 5% of the compensation, loss of ear may get 50% of the compensation, 25% of the compensation. So according to the table which is described in our policy or in our proposal form, the permanent partial disablement is payable. Say for example, now when I say that a person having accidental injury and his thumb is totally operated, it is cut, and if our policy says 5% compensation is payable, then in our case, when we are saying that the sum insured is 10 lakh, 5% of 10 lakh, that is 50,000 rupees is payable to the person himself. So this is a compensation, this is a benefit given for permanent partial disablement. The last one, temporary total disablement. I kindly request all of you to please be attentive for this phrase, temporary total disablement. Temporary total disablement, and the compensation given is weekly compensation at the rate 1% of capital sum insured, subject to maximum 104 weeks. Now see, the earlier phrases when we know that the disablement is permanent, permanent total, permanent partial. Now the phrase has come where the disablement is there, but it is temporary. This is not permanent. What is temporary? That means the period is temporary. Say for example 1 month, say for example 3 months, say for example 1 year. This is a temporary period for which the person will be totally disabled. The person will be totally disabled, but for a temporary period. For example, in case of any accident, a fracture to right hand. The fracture means his right hand is totally disabled. That is for sure, because he cannot use his hand for any of his working condition. So this disablement is total. But whether this is temporary or permanent, this is temporary. This is temporary. This is not permanent. So temporary total disablement, then in this case, the maximum compensation is how much? The maximum compensation is 104 weeks. But how much the compensation a person will get in case of fracture? Say for example, fractures, that is temporary total disablement. This compensation is a weekly compensation. These compensation will not be a daily compensation. Please try to understand. The weekly compensation are allowed at the rate 1% of capital sum insured. 1% of capital sum insured in our case, when we say 10 lakhs is our capital sum insured. The 1% of weekly compensation comes to 10,000 rupees. When I say that due to the fracture to the right hand of a person, for 1 month, the person is having the that is a plaster in his hand due to the fracture, and he cannot go to the work. So 1 month, that means 4 weeks. So weekly compensation of 10,000 rupees for 4 weeks, that is 40,000 rupees, is the compensation amount which is payable to the person since he is suffering from temporary total disablement due to accident. Now, the maximum compensation allowed is 104 weeks. So if you calculate 104 weeks, that comes to 2 years. When we say 2 years, generally in our sum insured column, when we arrive at the sum insured, generally when we will see the table A, table B, table C. So in that case, table A maximum coverage is 104 weeks. So 2 years maximum compensation will be payable under this temporary total disablement category. Now, these are the 6 very important points which we have noted. We'll move on to the next slide. See, weekly compensation of 1% is payable. So maximum allowed is 104 weeks. That means if the total sum insured is exhausted, suppose in case the first 1% of the sum insured comes to 10,000 rupees and his total compensation or total disablement lasts for 2 years. So 104 weeks multiplied by 10,000 will come to 10 lakh 40,000. So 10 lakh 40,000 will be his weekly compensation, but the sum insured is 10 lakhs. So definitely in that category, the 10 lakhs rupees or 10 lakh amount is payable to the person. This is a temporary total disablement weekly compensation, 1% of capital sum insured, subject to maximum 104 weeks. So there is the weekly maximum amount. The weekly maximum amount is a certain, generally it is term or it can be given as 20,000, but it may vary according to the sanction or the approving authority. This may vary. So there is no benchmark actually for how much will be the maximum weekly compensation. Now the special features. The cover is for 24 hours on worldwide basis. When a person taking personal accident policy, then his coverage is for 24 hours and on worldwide basis. If I have taken a personal accident policy in your office and if I go to abroad, now in this pandemic I will not be going, that is for sure, but still if I go to abroad, then if anything goes wrong, then worldwide basis coverage is there. So this policy will trigger if there is any accident. So this cover is for 24 hours and on a worldwide basis. Travel as a passenger in a licensed standard type of aircraft is automatically covered. So when a person is traveling through a licensed standard type of aircraft, that means he is a licensed passenger, then any accidental injury or accidental death is automatically covered under this policy. The third special feature is medical expenses on payment of extra premium. See, the medical expenses can be paid if the person pays 20% extra premium and he will be getting the benefits of medical expenses. Now, what are those medical expenses? And these are related to accidental medical expenses only. If any illness or if any sickness is there, and if anybody claims to you for the medical expenses, then this 20% payment, this 20% payment is done by the insured. Still we cannot make or we cannot pay the medical expenses. The medical expenses will be paid to the insured, and those will be paid in certain limits. So certain limits are also prescribed. Say for example, if the limits are prescribed as 10% of the sum insured, or 40% of the admissible claim amount, or actual medical expenses. So these terms are to be described while issuing a policy. So the medical expenses are payable if the insured pays 20% extra premium on the basic premium, and those medical expenses will be covered up to certain limits. What are those? The limits are 10% of the capital sum insured, or 40% of the admissible claim amount, or actual medical expenses, whichever is less. See, these medical expenses, if these medical expenses are not hospitalization expenses, now it may creep up in our mind that the medical expenses generally we term it as hospitalization expenses. But suppose if the person is not hospitalized, he has gone to a daycare center having the fracture done and came home after 2 hours, then in that case also the medical expenses are payable, because those are not the hospitalization expenses. The term or the phrase given here is medical expenses. So medical expenses will be covered on payment of extra premium. And how much extra premium one has to pay? It is 20% on the basic premium. The special feature, war and allied risk. War and allied risk, as you all know, in all the general insurance policies except the marine cover, the war and allied risks are not covered. War and allied risks are not covered, but the working in foreign countries on civilian duties can be covered at 150/250% loading on premium. To understand this phrase, because this is one of the important factor or the important special feature which I want to share it with you, because this may come in our exam. This war and allied risks are covered. See, I have taken your policy and I am working in India only, and if war or allied risks happen, then in that case I am not eligible for the compensation. But if I am working on a civilian duties in foreign country, if I am working on civilian duty in foreign country, then after payment of certain premium, 150%/250%, if anything goes wrong in accident, in war risks also, the compensation is payable. So these are the special features you should try to know and understand it very well from your exam point of view. The special features which are also there, which are continued, like cumulative bonus. Cumulative bonus is 5%, maximum up to 50%. What are cumulative bonus? Cumulative bonus are those wherein 5% of capital sum insured, that is in this 10 lakh, if this year the person has not suffered with any of the accident, next year his sum insured will be increased by 5%. Suppose in the second year also there is no accident, there is no claim, then again the sum insured is increased by next 5%, that is 10%. In the third year again 15%, fourth year 20%, so this goes on. So what will be the maximum cumulative bonus which a person can earn is 50% of the sum insured. So cumulative bonus is one of the key feature in personal accident insurance policy. Carriage of dead body. This carriage of dead body in case of any accidental death, 2% of capital sum insured or rupees 2,500, whichever is less. So these are the peculiar things which is very important to understand, and these are the additional features of the policy. These are the additional features of the policy. Third one, education fund. What is this education fund? First, for first dependent child below 25 years of age, 10% of capital sum insured subject to maximum rupees 5,000. So this education fund can be granted to maximum 2 children, and for more than one dependent child below 25 years, 10% of capital sum insured subject to maximum 10,000. So when we say for more than one dependent child below 25 years of age, the compensation payable or the education fund payable is maximum 10,000. That means these are applicable to 2 children. This benefit is available for only on capital sum insured and not on cumulative bonus. So whenever we say 10% of capital sum insured, and this benefit is available on capital sum insured and not on cumulative bonus. The phrase itself says that suppose a person is having 10 lakhs as sum insured and 50% as its cumulative bonus. So the total sum insured comes to 15 lakhs. Then in case of education fund, the 10% of capital sum insured will be on capital sum insured and not on the cumulative bonus. Whatever is the cumulative bonus, if the person is having, then on this cumulative bonus, this benefit is not available. Personal accident exclusions. Personal accident exclusions, these are very important. You should try to know the exclusions, because in our policy when we say coverage, we cover this, then we also has to explain, and it is a right of the insured to know what are the exclusions. Exclusions in simple terminology says what our policy does not cover. In our personal accident policy, what we do not cover: first, compensation in respect of death, injury or disablement arising from intentional self-injury. Intentional self-injury, or you can say suicide or attempted suicide, due to which the injury or the disablement, if it occurs to the insured person, we are unable to pay the claim. So intentional self-injury due to which the disability comes, or due to suicide, if death occurs, under personal accident policy, we are not liable to pay. Second one, influence of intoxicating liquor or drugs. Suppose a person is driving a vehicle, his own car, and while driving, he met with an accident, and in the death occurs. So in that accident, if the person is having the influence of a liquor or drugs and a death occurs to that person, then in that case, we are not liable to pay the claim. Engaging in aviation. See, this is very important. Engaging in aviation. Previously, we have seen that a licensed person who is in the aircraft is automatically covered. But engaging in aviation, that means he himself is engaged in aviation facility, or he is a pilot or the crew member. Then in that case, the personal accident exclusion comes in a picture. The next one is any breach of law with criminal intent. Be sure about this term. This is very tricky term, any breach of law with criminal intent. So what are the criminal? There may be n number of criminal intents, or there may be n number of breach of law, but the technical breaches of law are not excluded. See, I will give you one example. In and around Mumbai area, the local trains are running frequently. When a person is having a valid ticket along with him, and there is an announcement, the person is at the platform number 2, and there is an announcement wherein the local train which is scheduled on platform number 2 is shifted to platform number 4. And in a hurry, if that insured person, without using the bridge, if he is going to cross the rails, if he is going to cross the rails and any accident happens to him, you may say that this is a breach of law. Yes, this is a breach of law. But whether there was any criminal intent involved in that? No, there was no criminal intent. The person shifted himself from platform number 2 to platform number 4, since the local is scheduled at platform number 4, and to catch the train in a hurry, he has used the rail instead of the bridge. Definitely, the use of not using the bridge is breach of law. Yes, it is a breach of law. But the person, to catch hold of the train, he has done it. So there was no criminal intent. His intention was never a criminal in nature. So this type of claim has to be paid since there is no criminal intent. Service in armed forces. So the persons who are working in armed forces, we are unable to issue a personal accident policy. War and nuclear perils. This is already explained to you. If anything or any disability or death occurs due to a declared war, then this personal accident cover is not available. From childbirth or pregnancy. Suppose in case of any pregnancy related issues or childbirth, a lady, there is any death happens to a lady under personal accident, the compensation is not payable because it comes under the exclusion. Now the most important part and most important things what we ought to know is the classification of risk. Yes, the classification of risk is categorized in 3 risk groups. What are those 3 risk groups? Risk group 1, risk group 2, risk group 3. According to their degree of hazard in their working nature, these risk groups are classified. Risk group 1 is for the persons where the risks for the coming of the claim or arriving of the claim to the insurance company is less, is minimal. So in this risk group 1, the persons who are engaged are generally in administrative functions. So the risk of any accidental injury or accidental death is less in this risk group 1. So accordingly, the degree of hazard increases to risk group 2 and the highest is at risk group 3. Will come one by one. Risk group 1, this consists of accountants, doctors, lawyers, architects, teachers, persons primarily engaged in administrative functions. So this is risk group 1, wherein whenever the persons are categorized in this risk group, the rating is less, the premium is less. So risk group 2 will have a higher premium than risk group 2. Risk group 3 will have the highest of the premium because their degree of hazard according to their working nature. So risk group 1, accountants, doctors, lawyers, architects, teachers, and the persons who are in administrative functions. Risk group 2, these are contractors, builders, drivers, veterinary doctors, professional athletes and sportsmen, woodworking machinists, persons engaged in manual labor. Now you can very well identify there is group 2 are the manual laborers. Generally, they are the person who are in the fields. So whenever the person are in the fields, they are categorized under risk group 2. So it may happen that the contractors, the builders, the drivers, in case of many of our questions or when we are working in our office, we are coming across many of the instances where the engineers are to be termed under risk group 2 many a times, because according to the nature, if they are on a field work, definitely they are categorized under risk group 2. So these are the persons who are having a greater degree of hazard according to the accidental disability. The drivers, the builders, the contractors, they may face a more degree of hazard as compared to risk group 1. So this is risk group 2. Now comes the risk group 3. Risk group 3 are the person who are having the most highest degree of hazard in their professional skills or their working nature. The names as or the persons who are coming under this category are the jockeys, the circus personnel, working in mines with explosives, mountaineering, winter sports, and the persons who are engaged in activities of similar hazard. So this is risk group 3. So risk group 3, the premium is highest, and for risk group 1, the premium is lowest. So the degree of hazard and the rating comes according to the risk group. So try to understand the rating or the premium is arrived at according to the risk group and the table of benefits opted by the insured. To sum up, things to remember in personal accident policy are age limit 5 years to 70 years, risk groups 1, 2, 3. These are for the rating factor. CSI. What is CSI? Capital sum insured. What is PTD? Permanent total disablement. What is PPD? Permanent partial disablement. What is TTD? Temporary total disablement. Accident. The terminology of accident is defined as external, violent, and visible means. Also, it is solely and directly. Fixed benefit policy, personal accident policy, the things to remember is it is a fixed benefit policy and not strict contracts of indemnity. Now, to know this fixed benefit, as I explained to you earlier, a person having a salary of say 50,000 per month, how to calculate his sum insured? See, why these are not strict contracts of indemnity? Because here the human life comes in picture. Here there is no machinery. Here there is no building. Here there is no stock. Here there is no, any vessel which we cover under marine hull. So these are the contracts of indemnity, but not strict contracts, because a human life is insured against the accidental compensation. So fixed benefit, when we say the benefits are to be fixed at the time of inception of the policy. What are those fixed benefits? According to the risk group and according to their earning capacity, these fixed benefits are given. Say for example, a teacher in a school having salary of 50,000 wants to have a personal accident policy and wants to have a death benefit only. So his compensation or the sum insured will be fixed at the instance only or at the time of inception only, wherein generally 72 times of his monthly emoluments are calculated. You may say a 6 years annual income, and that will be the maximum sum insured which you can opt for the insured. See, these 72 times monthly emoluments or 6 times annual income is not fixed. It may vary. It may, a person may get more than that, a person may get lesser than that. So to arrive at a basic sum insured, you may fix his benefit under the policy by saying 6 years annual income. So in this case, when I am conveying you that the teacher is having 50,000 as his salary per month, his annual income is 6 lakhs. So his 6 years income will be 36 lakhs. So you may grant him a sum insured below 36 lakhs. So you may grant him 30 lakhs, you may grant him 25 lakhs, and accordingly rate and the premium will be arrived. So in this case, the maximum payable amount in case of death will be the sum insured. If you say 36 lakhs amount is the sum insured, 36 lakhs will be paid to the assignee in case of accidental death to this teacher. Try to remember this. I have said only death benefit is taken by the teacher. Suppose the teacher met with an accident and he has lost one of his eye. He has lost one of his eye. His disability is there, but has he covered this disability, the permanent total disability, whether he has opted for this table? If he has not opted for this table, then in this case, the permanent total disability is not payable. Hence, you cannot pay the claim because the person has taken only the death benefit. This cover is worldwide and 24 hours cover. One of the question is that after payment of the 100% of the sum insured. So when we say that in case of disability, permanent total disability, when I say that 100% of the capital sum insured is payable, your policy will not be any more valid then. Once the claim is paid, then the policy is not valid again. The compensation is paid to the insured, that is 100%, then the policy is not again valid and you cannot give the next year renewal to these type of person. Though the insured is alive, you are not supposed to issue a policy or the renewal to this person who is suffering from permanent total disability. So these are the things to remember under personal accident policy. There may come many things or many questions in your 13.2 exam on this personal accident insurance policy. I have tried myself to give you a clear picture of the phrases to know, the disability, how it has arrived, the disability, how it is payable, to whom it is payable. There are certain things like the proposal form is the basis of our contract, and if any claim comes, then the papers which are required for the claims are generally the police papers, the police panchanama, the FIR, that is the first information report, final investigation report, wherein the accident is described. In case of death, apart from the basic claim papers like the claim form, the disability certificate or the compensation, in case of death, the coroner's report is also important thing. The paper of coroner's report is a document which is required in case of death claim only, because this is issued when a person met with an accident and death occurs. Then in that case this coroner's report is there. So in case of any question which comes to you in 13.2 exam wherein the coroner's report is required, 1 2 3 4, death, permanent total disability or whatever, so your answer should be in case of death this coroner's report is required. So these are certain points which I think you all should remember and be acquainted with all the phrases of this personal accident insurance policy. After personal accident policy, the nomenclature itself suggests group personal accident policy. The terminology itself shows there should be group. Group is homogeneous group. What is homogeneous? The group, there should be first some common relationship among the persons to be insured and a central point for administration of the policy scheme. See, some common relationship, that means the employer and employee relationship. They can take the group personal accident policy. There should be a common relationship and a central point of administration has to be there. Second one, when I say the first point, the employer-employee relationship or the club and the member. If there is any club, a registered club with their registered member, they can take group personal accident policy. You know, nowadays you are all must be having the cards, the debit cards, the credit card. So there is a one central point for administration is the bank, and the bank which issues these credit cards or debit cards to his members, the customers or their account holders. This common relationship comes into picture in case of group personal accident policy. Second one, no insured person has an independent right of action against the insurer. See, this is important point because here a group personal accident policy, the individual person, he has not any independent right of action against the insurer. That means the employer or the club or the bank, which is a central point of administration, they are having certain rights. Third one, cumulative bonus and education grant is not applicable because this is not individual personal accident policy. This is a group personal accident policy. Fourth one, medical expenses and war risk extensions are available. So these are available, these extensions are available by paying extra premiums. The sum insured can be linked to emoluments payable to the insured. Though we are issuing group personal accident policy, the sum insured may vary according to the earning capacity of the person. See, for example, if in any factory, the general manager, he may have a salary of say 1 lakh, whereas the supervisor, he may have the salary of 50,000. So according to their earning capacity or their earning emoluments, the sum insured can be fixed and this can be vary according to their grade. So these are the features of group personal accident policy. The premium, these are dependent on profession or the activity involved in. When I say the profession is general manager, that is a manager, administrative person, definitely he will be risk group 1 category. He is treated under risk group 1, whereas the manual labor, the engineer, those will be under risk group 2. So these premium, these are dependent on the profession and the activity involved in. Secondly, on duty covers. What is on duty covers and what is off duty covers? On duty cover, that means when I say personal accident policy, we all know it is a 24 hours worldwide cover, correct? But in this group personal accident policy, if the employer asks the insurance company to provide on duty covers only, that means whenever his employees, their employees are working on duty, and if there is anything accidental injury or disablement occurs to the person, then only the compensation is payable. So in that case, we will charge 75% of the applicable premium. Now, in this case, you have understood that if the person has left the duty hours, and if the accident occurs, then in that case, our group personal accident policy will not come in the picture because the employer has taken on duty cover only. Likewise, off duty covers, the nomenclature itself says off duty cover. That means the persons who are not in working hours, not in duty hours, and if any accident occurs, then the compensation due to accident is payable. So this off duty covers, what is the applicable premium? It is 50% of the applicable premium. The next one is exclusion of death cover allowed when group life policy exists. What this terminology says, that when a group or a factory having a group of employees where the life insurance policy is already in force, when a life insurance policy is already in force, then the employer may ask for the exclusion of death cover. So in that case, the exclusion of death cover can be allowed if that group is having a life policy cover. The next one is group discount. See, these group discount are applicable where more than 100 persons are covered. See, don't get yourself confused with the discounts which are there in the markets which are going on. The group discount is specifically termed and it is according to the group the discounts are given. And this group discount is not allowed if there are less than 100%. 100% is a minimal requirement to avail a group discount. So these group discounts may vary. It may start from 2.5% or 5% and it will go to 50%. So it may vary. So there is no fixed benchmark how much percentage will be given, say for 100%, say for 500%, say for 1000%. It may vary. It has to be fixed at the time of inception of the policy. The companies have fixed their group discount pattern according to the size of the group. But the minimum number of persons required are 100, and more than 100 persons are, if they are covered, then group discounts are allowed. Any physical infirmity or defect oblique disability prior to the commencement of cover or any cumulative effect as a result of such disability stand excluded. No need to clarify this, because if there is any defect or disability, like in our medical policy, when we say if there is any pre-existing condition, we are not covering it, or we may cover after certain years. Here, in case of any defect or disability, we are not covering, or we are not give them the benefit of this defect or disability for any term. So if a person is having any defect or disability, those will not be covered at all. So excluding those defects or disability, we may give the policy. It has to be prescribed and noted on the face of the policy. The insured should know that he will not be able to get any compensation for the defects or disability which a person is already suffering from the same. Flight insurance coupons. These are the phrases, or these are the products under the personal accident policy. What are these flight insurance coupons? Passenger flight coupon provides cover for accidental bodily injury while embarking oblique disembarking from or traveling in any aircraft operated by a regular airline over a scheduled route as a passenger during the flight schedule or flight specified. The cover can be for specific flight or for specific period of time. Declaration policies can be issued to individual or companies for frequent flyers. So these are the flight insurance coupons which can be given to the passengers who are embarking or disembarking from or traveling in any of the aircraft operated by a regular airline. Student safety insurance. Again, a personal accident type of policy, but it is solely for the students of educational institution. These are available to schools, colleges, or other educational institutes. The benefits are given for the registered students. We all know that there is a muster roll, there is attendance, and all those in the with the school authorities. So the registered students are benefited under the student safety insurance. All students are to be covered. This is very important thing. You cannot have a bifurcation or segregation, or you cannot opt yourself, or a school or the educational institute cannot opt or say that I want 100 students to be covered out of these 1000 students. No, there is no selection facility. All students are to be covered. The additions are allowed, but deletions are not. See, the additions are allowed. That means by way of pro rata premium, the additions are allowed, but the deletions are not allowed for the students under the student safety insurance policy. The maintenance of that means we are not going to refund the premium in case of deletion. Maintenance of attendance register. This is one of the key factor for student safety insurance. Claim amount payable to the parent oblique guardian as recorded in the school register, and the policy is issued in the name of educational institution. Like the employer policy, what we say, group personal accident policy, it is issued in the name of the employer, and the names of the employees will be on the face of the policy. Likewise, we can issue, or we are issuing the policy in the name of the educational institution, and the students are the insured persons. The compensation limits per student 10,000, per accident 5 lakhs, per policy period it is 10 lakhs. See, these are certain basic amounts of compensation which are being given here. So when we say what is the amount of compensation payable in case of any death to the nominee or the parent or the guardian, then in that case, the per student limit is 10,000. Whereas per accident, you know why these terms are there? If there is any mishap or any accident occurs in a school wherein the number of students who are being injured, or there is an accident wherein more than one or two or three students are being injured or death occurs, then in that case this is termed as a single accident. So this single accident or per accident limit is described as 5 lakh. So in case of any accident, 5 lakhs is the limit per accident, and in a total 10 lakhs is a maximum amount of the policy which is payable. So the compensation limit per student are described, per accident are described, and per policy period are described. So this is a student safety insurance which is applicable and available to school, colleges, and educational institutions. So these are the personal accident policies, the different types of personal accident policies, and the coverage, exclusion, the risk groups, and your premium rating and premium. That was all for personal accident policy. We'll move on to burglary policy. The second policy which we will be going is now burglary policy. The nomenclature which I have shown you on the slide itself, it says burglary policy, but in between the bracket, it is said business premises. So this policy, burglary, is burglary policy, but any burglary which is happen or which is happening in the business premises, then this policy is going to trigger. Now, first of all, what is burglary? See, in common term, when we say, in our common term, when if any burglary happens, we generally say theft. A theft occurs. But what is burglary? The definition is given as burglary is defined as theft of property from the premises described following upon felonious entry of the said premises by violent and forcible means. The burglary is defined as theft, but this theft is to be followed by the entry of said premises by the thief or the burgled person by violent and forcible means. Yes, there may be violent and there may be many means of violent and forcible means, but there has to be violent and forcible means, then only the burglary nomenclature will come in picture. Second one, theft by a person in the premises who subsequently breaks out by violent and forcible means, provided there shall be visible marks at the place of such entry or exit by tools, explosives, electricity, or chemicals. So you can understand with this term that when a person enters in the business premises, he has to enter the premises which is locked by having a forcible entry. He may come by breaking the door. He may come by breaking a window. And accordingly, this is termed as violent and forcible entry. The same way, the exit would have been there by using the tools which a burglar can have the explosive material or the chemical with him, and accordingly he may have the entry or exit by way of forcible means. So please understand, burglary is theft only, but there has to be violent and forcible entry or exit. When we say violent and forcible, that means it is a forcible thing, not willingly, not with collusion. These are very important things what we ought to know regarding the burglary. The third one, the use of force and violence need not be against property only. It can be against any individual also. What this phrase says, the burglary, when I told you that the door is broken or the windows are broken, that is at the time when the whatever the factory premises or the business premises are locked. But if the business premises, when they are being burgled by the use of, say, gun, a threat is there, and if by use of this force or violence, if the burglary happened, then also that will be termed as a violent and forcible entry. So this violent and forcible entry has to be established. There are certain IPC sections, that is Indian Penal Code section, which we ought to know while settling or while arriving at the claim procedure. So burglary is defined as basically violent and forcible means. So whenever there is any violent and forcible means, then the theft of in the business premises will be termed as a burglary. The burglary policy covers contents of business premises against the risks of loss or damage by burglary and housebreaking only. See, this is very important thing. This policy covers contents of business premises. This policy covers contents of business premises against the risk of loss or damage. See, if any burglary is there and the material is damaged, then also it is a loss to the business entrepreneur. So there has to be a forcible and violent mean, then the burglary policy will trigger. Second one, fire risk is covered by issue of a separate fire policy. Why this phrase is given? Because whenever you are giving any burglary policy to a business premises, we are giving first a separate fire policy and then we are issuing a burglary policy. So burglary policy, as a prudent underwriter, you cannot issue only burglary policy, but a fire policy has to be issued and then only you issue a burglary policy. So this is a prudent underwriting. Third one, the property insured is covered only if loss or damage takes place whilst contained in the premises described in the schedule. This is very important because the location address of the premises is very important. If we are saying the business premises having a factory wherein a ground floor and first floor, so all these properties which are situated on the ground floor and first floor are to be covered, and it is to be mentioned in the policy. It is to be described in the schedule. So if there is any burglary occurs in the business premises, the location address and the coverage of the properties is very important to note and to give on the face of the policy. Now, what are the properties which are covered under the burglary policy? Stock in trade, goods in trust or on commission for which the insured is responsible. Third, cash and currencies locked in safe. Fourth, fixtures and fittings, tools of trade. Then, loss or damage to any part of the building caused by burglary or any attempt therefore is also covered. Now, we'll come one by one. What are the properties which are covered? Stock in trade. So, generally, a manufacturer or the trader will cover his stock, which is he think or for which he wants the coverage against burglary. The next one, goods in trust or on commission for which the insured is responsible. Now, what are these goods in trust or on commission? For example, I will give you one of the common example which you can very well understand what are the goods held in trust. When we are purchasing the shirt material and or the pant material and giving this material to a tailor, we are giving these goods to a tailor to have the shirt to be stitched. The shirt piece which we have given to a tailor is of mine if it is of a person wherein the insurable interest of myself is there. But since it is given to a tailor to be stitched, the insurable interest by way of goods held in trust of the tailor comes in picture. Because suppose if there is a burglary and in that burglary that shirt piece is stolen, it is burgled, then definitely you are going to ask that tailor to pay the compensation. So these type of goods are called as goods held in trust and or commission and or job work. That means whenever there is any job work, the person or your business person is having the goods which are not his own goods, but those are kept for doing some job work. So these goods which are held in trust and or commission and or job work are also covered under the property. That is, in the stock, these goods are also covered. the cash and currencies logged in safe. So cash and currencies in burglary policy can be covered provided those are logged in safe. The fixture and fittings, tools of trade, these are also covered under the property cover. Loss or damage to any part of the building caused by burglary or any attempt therefore is also covered. So what is this loss or damage to any part of the building caused by burglary or any attempt therefore is also covered? The person or the whenever he person who is having attempt of burglary, he is going to damage the part of the building or there is a loss to the part of building. So in that case, if it is due to burglary attempt, then that part of the building which is damaged or lost is also covered, which you can cover. That means if specifically you are covering building part, then this loss or damage to the part of the building caused by the burglary will be covered if you are covering it under the policy, and if there is any damage or loss to this part of the building, then this will be covered due to the attempt of burglary. So these are the properties which are covered under burglary policy. Now when I say the burglary or housebreaking, there are certain sections of IPC, Indian Penal Code, which we ought to know, and for your exam point of view, you should know these sections and under which definition this section comes. First, housebreaking, section 445 of Indian Penal Code. Theft, section 378 of IPC. Robbery, section 390 of IPC. Dacoity, section 390 of IPC. Burglary and holdup. See, according to the number of persons who are in attempt of burglary, these housebreaking, theft, robbery, dacoity, these are coming in picture. So according to the number of persons, these sections are categorized. So what are these sections and what are their actual definition, we will know when we understand this. First is theft, dishonestly taking away movable property out of the possession of any person without consent of that person. This is theft under section 378 of IPC. What is burglary? Taking and carrying of property from premises following felonious entry or exit by use of violent and forcible means. The presence of visible marks at the place of entry, the presence of visible marks at the place of entry or exit. This is burglary. What is robbery? Voluntarily causing to any person death or hurt or wrongful restraint or fear of instant death or hurt or wrongful restraint in order to commit a theft. See, what is robbery? What we all know, this is a threat given to a person. This is a fear of instant death to a person, wherein voluntarily the person is giving the keys or whatever is with him, he is giving to those robbers. So there is no actual forcible entry wherein the walls are broken or the doors or the windows are broken, but this is a threat to a person who is having a lock and key with him, and those keys are being obtained voluntarily, and these are obtained due to the threat or the person, and due to the fear of the death or the hurt, the person is voluntarily giving the keys. So in this case, the robbery comes in picture. So these are theft, burglary and robbery. What is housebreaking? Housebreaking is committing house trespass by effecting entrance into the house or already being in house for purpose of committing an offense or having committed an offense, effecting forcible exit. So what this housebreaking means, I will give you one example. In the business premises, a person who is having the malified intention has already come as a customer in the business premises. He is there in that business premises hiding somewhere. After that, after the business hours, the business entrepreneur has locked the premises and moved to his house. The person who is already having the malified intention is there in the business premises, and he has done all his wrongful act and done his burglary, and the exit is forcible because his entry is not forcible. He has come as a customer, he has hid himself in that business premises, has burgled the things, the premises, the stock and all those things, but while exiting he has effected the force. Then at the time of exit, he might have broken the glass of the window, he might have broken the glass of the door and exited himself. So in that case, this housebreaking section 44, 45 of IPC comes in picture. So this is committing house trespass by effecting entrance into the house or already being in house for purpose of committing an offense. So the purpose of that person was committing of an offense only, and having committed an offense, he has effected the forcible exit. So this will be termed as housebreaking. What is dacoity? Now here the number of persons, as you say, or as you are seeing on the slide, when 5 or more persons, armed or otherwise, jointly commit or attempt to commit a robbery, then this will be termed as dacoity. So dacoity is nothing but it is a robbery only, but whenever there are 5 or more persons which are armed or otherwise, when they jointly commit a robbery, then this is called as dacoity. See, the dacoity is, it is a part of the robbery, but the threat is more because the number of persons are more. The business entrepreneur cannot fight with the persons. So this is termed as dacoity. So dacoity is that whenever 5 or more persons, armed or otherwise, when they jointly commit a robbery or attempt to commit a robbery, this is called as dacoity. Then comes the larceny. Larceny, it is a theft committed by a person who has got a right to be in the premises. So larceny, in other words, it is a theft, but this is committed by a person who has got a right to be in the premises, where a person has a rightful admission in the premises, but the business entrepreneur, without his knowledge, without his consent, if anything is stolen, if anything is theft is done, that is termed as larceny. So larceny is termed as a theft committed by a person who has got a right to be in the premises. Hold up. What is hold up? Theft accompanied by assault. Theft accompanied by assault or violence or the threat of it to the insured or employees, irrespective of whether there is a forcible entry. See, this is a theft. Hold up is also a theft, but it is accompanied by assault or violence or the threat of it to the insured or employees, irrespective of whether there is a forcible entry or not. So whenever there is a, as I told you, what is hold up? When a person coming with a gun or a knife or whatever, any of these, he may come with an axe wherein he can threaten, he may threaten the insured or the employees who are there in the business premises, and theft may take place. In this type of scenario, the holdup will come in picture and we have to pay this type of claim in burglary policy. Key clause for our 13.2 examination point of view, you must know this key clause, and in future also, for your any future things to underwrite or claims or anything, these you should know this key clause and you should better understand this. What is this key clause? The loss of cash from the safe following the use of the key to the said safe or any duplicate thereof belonging to the insured is not covered unless such key has been obtained by violence or threat or through means of force. So what this key clause says, if there is any loss of cash from the safe following the use of the key, generally these keys are with the insured. These keys are with the insured. So if there is any loss of cash from the safe following use of key to the said safe or any duplicate thereof belonging to the insured, this is not covered unless such key has been obtained by violence or threat or through means of force. So the key clause says that the keys has to be stolen. There has to be some threat to obtain the keys from the insured, and then if there is any loss, then only that will be covered under key clause. The key clause cannot be deleted even by payment of extra premium. So the insured person may ask you to delete this clause because it may occur because of his negligence. He may have lost his keys, and after the loss of his keys, the burglary could have happened. So in that case, the key clause will come in picture, and you cannot delete this key clause even by payment of extra premium. Means this is a mandatory thing in burglary policy. A complete record of cash kept in the safe should be kept secured in some place other than the safe, and the liability of the insured is limited to the amount actually shown by such record. See, whenever a cash is kept in the safe, a complete record of the cash which is kept in the safe should be kept secured in some place other than the safe. Why this is important and why this key clause is important, wherein the insured person, the entrepreneur, should keep the record of this cash in some other place other than the safe, because if anything goes wrong with the safe, all those records may be stolen, those may be, the theft of those record may also be done, and the insured may say that I have lost all my records and I cannot ascertain that how much cash was kept. So what key clause says, that the record has to be separately kept somewhere else other than the safe, and the liability of the insured is limited to the amount actually shown by such record, because you cannot ascertain, you cannot know how much cash is kept in the safe unless and until those records and the owners of the proof is on the insured to show those records wherein the actual cash is there. Now, in today's scenario, since all the IT, there is infrastructure is there, so this record is definitely separately preserved or separately stored by the business entrepreneur. The keys of the safe or strong room shall not be left on the premises after business hours. What is the key clause? The keys of the safe or strong room, it has to be with the insured in common terms, and those should not be left on the premises after business hours. Otherwise, what will happen? After the business hours, if the burglary could happen or the burglary is there, and the persons who are doing the burglary, the thieves, they may have easy access of those keys, and with the help of those keys, the persons or those thieves may take the cash in their custody easily. So this key clause says that the keys of the safe or strong room shall not be left on the premises after business hour. So it has to be carried with the insured person. So it has to be with him only or her only, but it should not be kept in the premises after business hours. The property excluded. There are certain properties which are excluded under the burglary policy. Gold or silver articles, watches or jewelry, or precious stones or deeds, bonds, bills of exchange, promissory notes, cash, treasury notes and bank notes, checks, securities for money, stamps, stamp collection, books of accounts, documents of any kind, manuscripts, medals and coins, motor vehicles and accessories or livestock. So these are the properties which are excluded unless specifically mentioned. So the property which is excluded can be covered if the insured person specifies those properties, like the gold or silver article. Those can be covered if the insured person specifically mentioned and he wants to cover that property against the burglary policy. So these are certain properties which are excluded and which will be covered if specifically mentioned. Now, what are the perils covered? Burglary or housebreaking of property following upon felonious entry of the premises by the violent and forcible means. Theft by a person in the premises who subsequently breaks out by violent and forcible means. Damage to the premises by the burglars failing to be made good by the insured. So these are the perils which are covered. As we all know that there has to be violent and forcible entry or exit. There has to be the theft by a person in the premises who subsequently breaks out by violent and forcible means. So there has to be certain violent and forcible means wherein the burglary will come in picture. The damage to the premises by the burglar may occur and we can cover for under the perils covered. What are the exclusions? Loss or damage where any inmate or insured's family member or business staff is involved as principal or accessory. This is very important thing. What we should know that the insured's family member or business staff, when they are involved in the burglary as a principal or accessory, then those are excluded. We cannot cover the same. By acts of persons lawfully on the premises. What is this lawfully on the premises? This is termed as larceny. The larceny is not covered under the policy, where a person, when he is coming in the premises lawfully, that means a customer comes in the premises and he has taken hold of some of the things which are easily available to him without the knowledge of the insured and has gone away easily. This is a type of theft which is termed as larceny. So this act of person lawfully on the premises is termed as larceny, which is excluded under the policy. Consequent upon fire or explosion. What is this consequential loss upon fire or explosion? The business premises, if there is any fire or if there is any explosion due to which there is a opening of the business premises due to the fire or explosion, a person outsider may have the easy access to the business premises consequent upon the fire. That means those persons can be easily entered. They can catch hold of whatever are the material or the properties there of the business entrepreneur and can easily go away. So in this case, loss of these type of property consequent upon fire or explosion are not covered. These are excluded under the burglary policy. This is a burglary clause, or you may have a separate fire policy wherein this clause will come in picture, that You must have understood in our fire lecture. Then the loss of cash from the safe following the use of key or duplicate, unless such key is obtained by threats or violence. We have understood the key clause, but here the loss of cash from the safe following the use of key or duplicate keys is not covered, as we have seen it in key clause, that the loss of cash by use of key or duplicate key is not covered. But if there is any threat, if there is any violence wherein the criminal, the person, the burglar has given threat to the insured person and has obtained the keys from the insured by way of threat, and then he has done the burglary. So in that case, this exclusion will not come in picture and we have to pay the loss, because this loss of key by the insured is not of his own. It is due to the threat, and for his survival, he has given the keys to that person or the burglar, and due to which the theft or the burglary has happened. So these are the exclusions under burglary policy. Then there are certain natural perils, earthquake, due to which if any burglary occurs, those are not covered. Riot, strike, and civil commotion. We all know this is termed as SRCC, riot, strike, and civil commotion. These are basically excluded under the policy, but by way of paying extra premium, you can cover the riot, strike, and civil commotion. So whenever there is any of the riots, any of the strikes which are in certain areas or certain place going on, and due to which if burglary occurs, then those will be excluded in the basic policy. But if the insured person has opted for this extension, then we can cover by paying, by taking the extra premium. War and kindred perils, nuclear risk, as we all know, these are excluded. Premises left uninhabited by day and night for 7 or more consecutive days and nights. See, if this type of thing occurs to the business premises, then definitely the persons who are watching or having a the eye on that business premises for day and night and for 7 or more consecutive days, they are knowing that these premises are being in lock and key for many more days. So there is no chance of getting caught by the police authorities, and there is easy way of burglary, or the chances of burglary is easy. So this exclusion is there, that premises left uninhabited by day and night for 7 or more consecutive days and nights. See, this consecutive is very important, because if the business premises is in lock and key for say Saturday, Sunday, Monday, or there are holidays, so definitely the premises are going to be under lock and key. But if there are 7 or more consecutive days and nights and premises left uninhabited, then the chances of burglary is more. Now, we all know that during this pandemic period, there are many premises which are left uninhabited by day and night for more than 7 or more consecutive days and nights. So, in this pandemic scenario, it is the insurers who will be dealing in such type of claim if it occurs according to the merits of the claim. But this exclusion, this loss or damage where the premises are left uninhabited by day and night for 7 or more consecutive days and nights, is part of the exclusion under this burglary policy. Now, the important points about the conditions in the burglary policy. What are the conditions? The indemnity. Indemnity is extent of intrinsic value of property loss subject to sum insured. See, this is the burglary policy are the strict contracts of indemnity. the repair damage to property or premises insured. So this, by way of indemnity, we can make good the loss to the insured. Condition of pro rata average. What is pro rata average? In our general common insurance term, we call it as underinsurance. Then the subrogation. What is subrogation? Subrogation is a right of recovery. What is contribution? If more than one policy, that if there are two policies in picture, the contribution principle will apply. Fraudulent claim, this will not be payable if there are any fraudulent means. Arbitration and disclaimer. You know what is arbitration? Arbitration comes in picture when the amount of compensation is in dispute. Cancellation, that is a short period basis or pro rata basis, either or. If the insurer cancels the policy, it is on the pro rata basis. If the insured opts for cancellation, it is on the short period policy. That is on the short period basis. Reinstatement of sum insured. What is reinstatement of sum insured? See, suppose if there is any loss due to burglary, and due to the burglary, the premises, the property lost is of say 5 lakhs of rupees. So what is reinstatement of sum insured? It is described here. Immediately upon the happening of any loss or damage, as described in the policy, the total sum insured under the various description of the property which have been lost or damaged shall be reduced by the amount of loss. That means, suppose entrepreneur has taken a policy for 10 lakhs. Due to burglary, the property of rupees 5 lakh is stolen. So definitely his sum insured is reduced by 5 lakhs. But he has to reinstate the full sum insured by paying additional premium for the amount of rupees 5 lakhs which is stolen or which is burgled by the burglar. So this is called of reinstatement of sum insured. That means the original sum insured of 10 lakh is to be reinstated, and the reinstated amount is of 5 lakh. So 5 lakhs amount is burglary amount, which is a claim amount, which has to be reinstated up to the full sum insured. That is, again, for the next term, that is till the expiry of the policy, the sum insured will be full, that is 10 lakhs. So this is reinstatement of sum insured, and for the amount of reinstatement sum insured, the extra premium, the additional premium has to be paid by the insured. Then only this reinstatement of sum insured is possible. Then only you can reinstate the sum insured. Special features. This policy contains the usual average clause. Insurance must be effected for the full value of property to be insured unless first clause basis is underwritten. First clause basis is also a burglary policy, and the probable highest amount at risk at any one time should be declared. So these are, there are certain rating part, there are certain policies of burglary, the first clause policy, the floating policy, which we will be doing or which we will be enacting with in our tomorrow's lecture. So till now, the burglary, most of the things are covered, but there are certain things to be covered under this burglary session, and which we will cover in tomorrow's session. So for today, we will keep our session close here, and we will come to you tomorrow the same time, that is 7 o'clock, with many of other products which we have been, which we are being acquainted with, and we will be doing in tomorrow's lectures. there are certain questions that will the PPT will be shared or this type that uh, definitely it will be a great help to you also if the PPT is shared, and definitely our union will give you this PPT presentation and will try to uh, give it to you, because if your mail IDs or those are shared, then definitely this presentation will be shared to you. For today, we'll close our session, and tomorrow once again we'll come for this miscellaneous insurance. I know this is a there is a wide range of products under this miscellaneous insurance, and but if you try to know the things, and if you try to sum up certain things, and when you understand the thing, it will be easier for you to make good yourself, not only in 13.2 examination but in your career also, because you are the bright future of the industry, and you are going to serve the nation by giving your 100% to the industry, and by knowing all these facts you can serve the industry and nation as a whole. So from my side, very all the best to all of you, and try to know the things and be prepare yourself for this 13.2 examination. Thank you. Thank you very much. Good night.